What is good stuff, family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down some very important things about Tesla's share price and why on earth people can make some crazy money on its volatility by using some different strategies out there other than simply buying and holding shares. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. The best part is any can be a free Tesla share, a free Apple share, or a mix of all of them. It's a limited time offer. The offer ends in just 5 days, so check it out before they run out. With that out of the way, let's get on with the video. So anyways, guys, I am quickly recording this during the Thanksgiving break just to give you guys more content and help you understand something that can make people lots and lots of money if they know what they're doing. Now, like I said before, I'm not going to give you guys any financial advice. Nobody's obligated to use any of these strategies, but it could actually help you, like I said, if you know what you're doing. So this strategy basically involves buying leaps on Tesla. If you don't know what leaps are or long-term calls, I could actually break this down simply for you. If you are planning on trading options, all right, the best thing you could do is educate yourself and then practice without taking huge risks from the very beginning. How do you do this? The first thing is, all right, my video right now is not going to give you all the information out there about options. There's no way I could cover it all in one video. You have to research on YouTube from other people who are very knowledgeable. Look up courses out there if you really want to take it and learn, educate yourself. That's the first thing you have to do. What is an option? What is a call? What's a put? How do you short a stock? Because these could be very risky if you play them wrong. Now, what I like to do, especially when I'm trading, at least trying to buy like long-term leaps, is you could buy calls. And there's a difference between buying calls and selling calls initially. When you simply go long on an option, the amount of money you could lose is just limited to how much money you put in. So for example, when I buy calls, or if I go long on calls on Tesla, this means that there are many things that can really affect how much money I make on them. And the most amount of money I lose is how much I put in. So if I buy $1,000 worth of Tesla calls, the most I could lose is $1,000, the same amount of money I put in. And that's the reason why a lot of people like to play these strategies, because they use money they're willing to lose. But anyways, what's a call? Just to make this simple, it's basically a contract. You're buying a contract, a call option contract, and it gives you the right but not the obligation to buy 100 shares of a particular ticker at a given price, and that price would be your strike price. So you have the rights to exercise these options, or you could just simply flip them and make money off of them. So how does this work? You're buying this contract, all right? Let's just go, for example, let's say you want to buy a contract for July 2023, and you have these strike prices. You're basically going to be betting in a way, and these bets don't have to be necessarily just gambling. They can be very logical based off fundamentals in a company, the growth, the catalysts, and all these things. You are basically making an educated, fundamental based bet that Tesla will hit a certain price by a certain time. So if the expiration date would be July 21st, 2023, that's the date. And if you choose this date, you are expecting Tesla to reach $300 by this specific date if you choose to hold the contract until then. Now, each contract has value to it. If you're buying a call, there are many factors that affect the value. One of them would be the price. If Tesla's share price goes up, the value of your contract also goes up, but it's also affected by implied volatility and many other factors. But just to make this simple, it's going to be affected by the price of Tesla. Tesla's price goes up again and again and again. So this contract right here, I know it's a 7.90. When you buy the contract, like I mentioned, you have the rights but not the obligation to buy 100 shares of the stock. So per share is like $7.90, or for 100 shares, that's $790 per contract. This 790 will actually go up in value for like to like 800, 1,000, 5,000 if Tesla's share price goes up. All right. If implied volatility goes up, that could also help it. But remember, the value could also go down if Tesla's share price starts going down. Now, when it comes to the date, the farther you buy them out, the more expensive they tend to be. And that's because of the fact that the risk isn't as high, and also because of the fact that there's a data decay that's going to cause the price to go down over time. So you have to remember what data is. And I want to just note that when you buy options with expiration dates that are closer to the current date, the data decay is worse, and it's actually a lot trickier for a lot of people. What is data decay? The value of the contract goes down over time. All right. So you have to look at all these different factors. But I just want to, I know that I'm not explaining it in the most perfect way, and I'm kind of trying to rush through this. But like I said, please research options, how they work, how call options work if you are completely new. If not, what could you do about Tesla? Well, the most simple strategy ever, a very simple strategy is we know Tesla's going to most likely go up eventually. Is that guaranteed? No. Nobody can guarantee anything in the stock market, but we know it most likely will start to go up. Now, when I say that, what evidence do we have? The all-time high is over $400. We saw this thing at 300 back in like September, and we know this thing could run because of fundamental improvements. So the real question is, how could you actually make money on this play? Imagine you had bought call contracts, long-term call contracts when Tesla was like around this zone right here, between 180 and like 200. And you bought them with expirations for 2022, like right around here, January. The value in Tesla's price went up so much that your long calls would have made you tons of money. Crazy, crazy returns on those, right? The implied volatility would also go up. That can help you make a big return. And let me just show you guys how this can make you some crazy money. Now, the risk is we don't know exactly what the stock will do. And if Tesla does not reach the value that you want it to go to, the value of this could actually go to zero if things don't go as planned. That's why when you are starting off, do research and don't start trading immediately. I can't stress that out enough. If you are new, if you're new, stick to paper. This means that you have an imaginary, a virtual, like $1,000,000, $100,000. You get to trade with it on a brokerage account. I think Webull allows you to do that. And that's part of the reason why I'm promoting it, because you can actually use Webull for paper trading. You have a virtual $1,000,000, you get to trade with that to see how you do, and then you could strategize. And once you become pretty decent at it, you could start using real money with your own money. But my point is, imagine you become good at this and you start actually learning how to trade options and you make a lot of money. Well, with Tesla, here's what you could essentially do. Let's say I bet Tesla is going to be going up in value as time goes on because of fundamental improvements and so on and so forth. So I choose an expiration date that's far out there to give me a lot of time. Let's just, for example, say July is my expiration date. All right, that's pretty far away. Let's say I want to bet that Tesla's going to go to, I don't know, 280 a share by then, just based off the contract. This contract would essentially give me the right, but not the obligation, to buy 100 Tesla shares at 280 per share, no matter where the price is by this date. Now, the thing about this is there's no guarantee Tesla's going to be this high. There's no guarantee. But in my opinion, it's very possible it could still reach those numbers. Now, let's just say, for instance, I want to buy, I don't know, maybe like 8 contracts. All right, spend like $8,000. That's kind of a lot for a lot of people. Maybe I'll stick to like 5,000. What I would do is, this is just hypothetical, guys. Do not pick this like during a time like this. Please be very careful with your options. This is just a hypothetical example, okay? Let's say I put in like $5,000. How would I look at this 5,000? What I would personally do is I would set a stop loss just in case the value does end up dropping and I'm not like really there to sell these in case it doesn't work out. But I basically hold these contracts, 5 of them. If I do buy them, I could sell them whenever I want when the market's open. And I also could exercise them, which means I could actually go with what the contracts want to do. But the majority of investors try to just sell the contracts for a profit. You flip the contracts. So I buy 5 contracts for $5,000. All right. What's going to happen to this $5,000 value of these contracts given certain Tesla share prices? Let's start with about 270 to about 400. Tesla's all-time high, or close to Tesla's all-time high. So as we approach the date of July 21st, 2023, if Tesla is at $270, the value of the contracts, and 270 is like way higher than where Tesla is. If Tesla hits 270 by November 30th, which is just like super close, what was that, $5,000 I put in, right? That would make me a return of about, what was that, $18,000, 19,000. If Tesla magically hits 400 a share, if it hit $400 a share by next week, you would make $66,000 from that 5,000. Crazy return. But if Tesla only hits like 300 per share, by the time we hit like the end of the year by like January, for example, you're going to make around like 20,000, 400, 500% around there, which is still a pretty good return on your investment if Tesla really does get that big move to the upside. So Tesla doesn't have to hit perfectly that 280 level for you to actually make a profit on this. If this thing starts going up, you could still flip it and still make money. Let's use a better range. I think my range wasn't that good. Let's start with 200 to like 400. All right, this is a little bit better. So if Tesla's at only 200 a share by November 30th, you're going to make about $2,600. But see how as time goes on, we need Tesla to start going up for it to actually end up in the money, for the call to end up in the money for you to make a profit. So if Tesla's still at $200 by the time we get to March of next year, April of next year, you're actually going to lose $3,000 from that 5,000 you put in. And if Tesla's still at 200 by the time we get to the expiration date in July, you lose $5,000 or the exact same amount of money you put in. So like I said before, the most you could lose is the money you put into buying these calls if you're going long. But if Tesla hits $300 in by next week, all right, you're going to make $27,000. If in January, if it doesn't happen until like January, you make 25,000. If it takes longer, see how the longer it takes, the less you end up making. But at the end of the day, your gains can still be very good. If Tesla does not hit $300 until like March or April of next year, you're still going to make about, let's see, right here, you're still going to make about 18, 19,000, which is still pretty good if you're just putting in like $500. And you guys can see how this like declines as time goes on, because more time leads to more theta decay, right? And also the value of the options goes down because the expiration date gets closer. That in turn is going to affect the price. So then what if Tesla explodes in value? See how it did this before? Right here, $400 a share, all-time high. If Tesla hits its all-time high in November and you were holding just 5 of those calls, you would make like 63,000. And if Tesla hits 400 by January, you'd still make about 62,000. If Tesla does not hit 400 until like March or April, you'd make about 60,000, almost 60,000, 58,000 around there. If Tesla does not hit 400 until like July, you could still make 50,000. That's still a 1,000% return on your investment. Remember, you only put in $5,000 and you're turning it into 50,000 in just a couple of months just by letting it sit there, if you do it right. And then that does not account for like implied volatility and the other factors that end up impacting the price. I think you could do it right here. So what if implied volatility goes up during like earnings? It goes up like 100%. Then this would obviously become even better. Hold on. We could say like 200%. Yeah, so in that case, you would actually make even more. You'd be making like 80,000, 90,000. You can make $100,000 if implied volatility goes up that much. But anyways, guys, it's just a simple example, guys. Let's not worry about implied volatility. But I'm sure you guys get where I'm going with this. Those Tesla leaps, if you buy a ton of them near the bottom and you time it right, if you happen to calculate where Tesla may get a big bounce or something like that, you could flip these calls and make some crazy returns. And if Tesla ends up coming down to like in the next upcoming months, if Tesla does end up coming down again to like the 150 level, maybe lower, if someone loads up on calls down here and they give it a lot of time to start recovering, they can make a ton of money, crazy amounts of money. That's why when you look at a lot of those subreddits or those posts on Instagram or whatever, people talk about how they made $1 million off this stock, they made $1 million off this. People also talk about how they turned $100,000 into $0. They lost everything because they weren't playing the options right. So if you want to learn how you can make crazy returns on Tesla, if you were to buy like 100 shares or a bunch of shares at $100, you would need Tesla to hit $400 for you to 4x your money just from shares alone. But the benefit of shares is there's no expiration to them. You could hold shares for years and decades. But if you're buying options, it's riskier. There's a risk you could lose everything, right? It's riskier. But if Tesla truly does make the big move by the time frame you're looking for, and you time it right, you account for the different factors like the theta decay, the vega, volatility, all these different things, the delta. Once you understand each and every single one of the Greeks, and you play it right, you can make even bigger returns. You can make 1,000, 2,000% returns on some of these calls if you play them right. Are you going to do that for every single one? Not necessarily. Maybe some of them you could, but on most of them, you could even do this on a daily basis if you trade this thing right. But I just wanted to give you guys this idea, okay? This idea of when Tesla comes to these really low levels, if you're putting in money you're willing to lose into buying these options, these call contracts, the return on investment could be crazy, crazy huge if you play it right. Now, I also gave you guys my like price forecast on Tesla. I mentioned the fact that I could see the share price hitting all-time highs or coming close maybe next year. If not by the year after, we could see it hitting 600-700 or even higher. I mentioned this thing could go to the thousands, if it keeps on respecting an uptrend and they keep on working very well with these deliveries. I wouldn't bet against this company. I wouldn't bet against Elon Musk. And I'm very bullish. So my point is, if this thing is going to keep running like this, you may as well take advantage of the opportunity and make even more money on those leaps. This is how people can make millions off Tesla, not just by buying shares, but they could turn $10,000 into millions if they trade it properly. Trading is difficult. I know from experience, it's not easy whatsoever. It's going to require lots of discipline. And once you control your mind, you can change your life. Anyways, thank you all for listening. If you're interested in learning how to trade options on Tesla to make crazy returns, first you got to research everything. You got to find people that are very knowledgeable, who are very experienced, that maybe could help you out, and trade with paper money, not real money when you're starting off. Not financial advice, by the way. But anyways, be very careful. And as you educate yourself, if you stay consistent, and if you truly learn, there's a good chance you could change your life if you haven't done it already. And you can make crazy, crazy returns on stocks like Tesla, on Apple, on Amazon, on smaller caps, on the SPY, the QQQ, the NASDAQ. You can make crazy returns if you play it right. That's what I have for this one. And one passive way to do it would be those leaps, those long-term options, super long-term. You can even buy them. You can even buy some like all the way out until like 2024. Let's just calculate that real quick before I end the video. Let's say somebody wants to buy like, and they're very expensive. Let's say someone wants to buy like, I don't know, $500 calls on Tesla like this. And you buy like 8 of them. All right? $500 strike price calls for 2024. Tesla would have to go, if Tesla hits maybe between 450 by 2024, by the time the expiration comes, or we get to a high of like 600, the return could still be crazy high. As I mentioned before, by the time Tesla, I think that's too far out. I can't even show that. But Anyways, by the time Tesla actually reaches those high levels, it could actually take a while. There are going to be some instances where they end up being kind of red if things don't go as planned, but other instances where the return could also be crazy high. People can make 50, 60,000 dollars, maybe more if they play it right. But anyways, that's just my point, guys. It's not a bad idea to do this, but if you do end up getting those long-term options, you have to be very careful with the timing and the point of entry. You got to study and do what's best for you. Anyways, that's what I have for this one. People could make crazy returns if they learn how to play Tesla right. This was a different video from my typical ones. I want to thank you all so much for listening. Please have a great rest of the day. Please enjoy the rest of your weekend, and I'll see you guys in the next one. Tesla to the moon, because the long-term future is still incredibly bright, and peace out.